Hi, this is Anthony Parent of Parent, and Win LLP, the IRSMedic, and in this video I'm going to go over 4 IRS offer and compromise tips. And just to let you know that the offer and compromise is a legitimate program and it's a great way to reduce your tax liabilities, but it is not the only way. But for some people it is really beneficial that in fact you can pay pennies on the dollar. How much you'll pay is really a function of what your ability to pay is. It's not a straight percentage of what you owe. So let's start off with some tips here. Your first tip I want to give you is your actual expenses. When you're going to prepare your 430, you're going to prepare a 433A form OIC, and it's going to ask you for your actual expenses. You have to be very, very careful here. You don't want to go and just blindly put down your actual expenses. What you need to do is you need your numbers to come in close to the IRS allowable expenses. Because if your actual expenses are over, the IRS says, well, we're not going to give you credit for that. And where you do have your actual expenses higher than the allowable expense, well, then you know that is something you need to address with the IRS and give them an explanation why it's reasonable. The IRS allowances are not the end of the game, but that's what the IRS will start with. So that is really something you need to do, is be aware of the allowable expenses versus your actual. Try to get them close together. Where you can't get them close together, come up with the reason why you should be allowed that expense. Our next tip is you need to legitimately reduce equity positions. Sometimes people get a bright idea to say, oh, you know what I'll do is I'll just get rid of my boat. I'll just get rid of my motorcycle. I'll just get rid of my property. Then I'll show the IRS, hey, look, I don't have anything. I don't have any equity at all. Well, what you end up there is something called a dissipated asset, that just getting rid of something out of your name, well, the IRS can track assets that are recorded with the Department of Motor Vehicle Registry or land records, so that they can know what you have owned in the past. So they'll find out a bunch of things of what you've owned, and they'll ask you, hey, what happened to this boat? We know you bought a boat. Where is it? So you really want to make sure that you never dissipate an asset like that, that if you do have assets, that's really where the IRS is going to look for some of your, for the amount that you're going to offer. But you also want to make sure you use the right value and not value it too highly. And also for people who are older and they have a retirement, the last thing we like to see people do is people who have a retirement account liquidate their entire savings to pay off the IRS. There is actually a way to legitimately create an arm's length transaction so that you're converting that equity into a future monthly stream of income that is more in line with what someone's actual position is. That if you had $200,000, $300,000, but you're 65 years old, 70, that's really the money you need for your retirement. So there's ways to protect that, and there's ways to mess it up so the IRS won't accept it. Our tip number 3 is use the IRS collection statute expiration date, what we call the CSED in the game, to your advantage. That there is only a limited amount of time the IRS has to collect on a debt. In most cases, there's some exceptions to that, like if you're not inside the U.S., but most cases, your debt is going to expire at some point. So what you want to do is sort of convince the IRS, hey, you have this much time to collect from me. This is what I'm making each month. This is all you're going to collect from me. Hey, look, I'm offering more than that. So that's really something you want to make sure you're knowledgeable of. For that, you are going to have to know how to read your account transcripts, request those from the IRS, and how to read those, and those certainly could be a trick. Our 4th tip for today will be get ready for an appeal if you need it. That means you have to build your case correctly and challenge and see and ask the examiner who rejected it. You want to ask them for the income, expense, and asset tables so that you can see if they made a mistake somewhere, because a lot of times we see that. And now you have some grounds to appeal that's more than, please have mercy on me. You actually, the appeal officer can say, oh, I do see that something was done incorrectly down here. And also in appeal, if they're going to reject your offer, there might be a better solution available for you. Offer and compromise is not always the best solution. There's other things that we do partial payment agreements, currently not collectible status, sometimes setting up a bankruptcy, and those all sort of tie together with the status of your case, where your collection statute expiration date is. So with that, our conclusion, you really need to prepare an offer and compromise with caution. Obviously, this is what we do, and so I have a vested interest in telling you to hire us. Obviously, some people can't. And should you do it yourself, should you hire someone low cost, this is what I just tell you. How important is it for you to get this done once and done right? That's really what it comes down to. If it's not a big deal to you, why do anything, I guess? But if it is a big deal to you, you're going to want to have someone who knows the ins and outs and all the tricks of filing an offer and compromise for the lowest possible amount that will actually get accepted in cases where an offer and compromise is the best solution for you. This is Anthony Parent of Parent and Win LLP, the IRSMedic, and I thank you for watching, and please subscribe to this channel.